You know, it's like in a bubble. The bears are right and the bulls are right, but at different times. Every bubble will go up, and then eventually the bubble bursts, and then, you know, prices collapse. So during the bubble stage, the bullish people are right, and during the collapse, the bears are right, but at different times. So this is the same with deflation and inflation. I think both will be right, but at different times. And I believe that most people have a misconception of what inflation is. In other words, most people, they think of inflation as an increase in the price of goods they go and buy in the shop over there and over there, at the butcher and at the baker and in the grocery store and so forth. When in fact, this is just one of the symptoms of inflation. You can have inflation that manifests itself in sharply rising wages. This hasn't taken place. But if you look globally, say in China, wages have gone up substantially. Or you take Thailand, wages have gone up substantially. Or it can manifest itself in rising commodity prices. Well, I mean, commodity prices have been weak lately, but the oil price is still close to $50 a barrel, and it was at $12 a barrel in '99. So, and the gold is still around $1,000, and it was at $300 and below in the 1990s, and the low was at $255. So you understand, a lot of things, they've been weak recently, but they're still up substantially compared to the past. Or you take bond prices. In other words, bond prices go up when interest rates go down. Bond prices in the last 100 years have never been this high. In other words, interest rates have never been this low on sovereign debts. Or you take equity prices. Okay, some markets are down, most the emerging markets, whether it's Russia or Brazil or the Asian markets, they're down from the peak, but they're still much higher than, say, 10, 15 years ago. Or you take property prices. Depends which properties, but most property prices, say, if you look around here, Switzerland, the prices are much, much higher than they were 15, 20 years ago. Even in some areas, they may have come down a bit, but in luxury areas, they're record prices. Or you take the Hamptons or Mayfair in London or Chelsea in London, Kensington, and so forth. Prices are very high compared to, say, 20 years ago. You understand, prices have gone up dramatically. So if someone says to me, well, there's deflation, I tell him, well, tell me in what? You know, Hong Kong property prices, Singapore property prices, even Bangkok, Jakarta, and so forth, all have been grossly inflated. Yes. And therefore, I think we have to re-examine the definition of inflation, whereby maybe we have some sectors of the economy that are deflating, like if we measure wages inflation adjusted, they're all going down in the Western world. Because the consumer price inflation that the Federal Reserve and Europeans report has nothing to do with the cost of living increases. The cost of living increases, and we have studies about this, in most American cities are rising at between 5 and 10% per annum if you include insurance premiums, healthcare costs, education costs, and so forth. So these prices are going up strongly. Or taxes, indirect taxes like tunnel fees or bridge tolls, and so forth, all that is going up much more than the CPI. And this is where people have to pay for to actually go to work and live. And this is then reflected, this kind of inflation is reflected in a diminishing purchasing power of people. That's why retail sales are relatively poor in the US, despite of the fact that we are 6 years into an economic expansion. And I'm always telling people, You know, when I started to work, I didn't have to be smart, because if I put my money on deposit with the banks or bought government bonds, they were yielding 6%. Then from 70 to 1981, interest rates continuously went up. So the compounding impact was very high. Now, if I'm a young guy, say your age, then I want to put my money on deposit, I'm being F by essentially the banks, because they're not paying me anything. If I buy 10 years US Treasury notes, I'm getting a yield of less than 3%, 2.3% at the present time. It was below 2% 6 months ago. So how can I really save? How can I make money? I want to buy a house, okay? Then you have to pay a huge price, and the mortgage rate may still be around 4%, you understand? So it's still a relatively high interest rates on mortgages, and one of the reasons that new home sales are not particularly strong is that young people just don't have the money to buy it, because, A, they're also burdened with student debts. Yes. So, I mean, these are all issues that are very complex. My sense is that knowing the central banks and knowing the way they think, what will come up when they realize that the global economy is not healing but actually back into contraction under the influence of the neo-Keynesian like Krugman, they will say, you know what, we haven't done enough, we have to do much more. And then they'll print again, and that's why I think eventually we could have high inflation rates and a renewed increase in commodity prices. Yes, I mean, I have read a lot about inflationary periods in history, which we have experienced from time to time, under John Law in France, and then later during the French Revolution and in Latin America. And I also experienced periods of high inflation myself, in the sense that during the very high inflationary period in Latin America in the 1980s, I visited most Latin American countries because I was interested in the fact that when you have high inflation in a country, usually the currency tumbles. And so although there is high inflation in local currency, in a strong currency unit, like in the 80s the dollar was strong, the price level actually went down very substantially. So investment opportunity were fantastic. You could buy buildings in Buenos Aires. The stock market in the late 1980s in Argentina, the whole stock market was worth $750 million US. 750, less than $1 billion. So you could have bought essentially the whole of Argentina for less than $1 billion US. And what happens in these periods of high monetary inflation is it's highly beneficial for a few families, for a few well-to-do people, because they know how to move their money between local currency and foreign currency, and they know how to accumulate assets. The people that get hurt are the masses, the middle class, the lower classes, because their wages go up much less than the cost of living increases. And then what usually follows is a kind of a political change of wind. And you have new governments coming in, and sometimes you have revolutions, and sometimes you have an entire new leadership. I mean, we had the hyperinflation in Germany, and by the way, it's a very good book out about the economics of inflation during the Weimar period. And but in each instance, it led to a polarization of wealth. And this is precisely what is happening now. You have huge merger and acquisition activity, and you have stock buybacks. And if you look at the wealth inequality, it's not between 1% of the population and 99. It's between 0.01%, the Carl Icahns of this world and the big asset holders, and then the masses that do not have assets, so they don't benefit from rising asset prices. And in my view, you look at Trump. Donald Trump is no genius or anything, and he's not a particularly honest person either, because his investors that bought bonds that were issued by his companies, most of them lost money. But he touches on one point, and this is a great dissatisfaction of the typical American with his government. And I can tell you also here in Switzerland, 90% of the people, they think the government is no longer looking after the interest of the people, but after their own interest. And the same in Europe. Right. And I think this is a huge failure of democracy, that democracy, instead of having been able to elect leaders that look after the interest of the people, they actually look after their own interests. Yes. I mean, you look at the Clintons, you look at the Bush families and so forth. You think they care about the ordinary American? They don't care. They care about themselves. It's a power game. They care about money, that's for sure.